Okay, next question. Okay, what type of company? So just like in Singapore, you have a number of entity options. The most common would be an LLC, which is a limited liability company. So it is a company that's formed at the state level. But then the federal government asks, well, okay, we know you formed, because the LLC is a creature of the state, not the federal government. So you formed a company at the state level, but then the federal government is like, well, how should we treat that company? There are two basic options. There are a lot of options, but the two basic ones, the two most common ones, would be as what we call a C-Corp. That'll be the equivalent to private limited in Singapore. So basically a regular company. It creates a stronger layer of protection between yourself as the business owner and any liabilities that may arise as a result of doing business, which is kind of important. But the downside is that, of course, you will be double taxed. And what do I mean by double tax? In that, when that company makes money, that company would be, that C-Corp will be an entity on its own. It will have, it's a legal person on its own with rights and responsibilities of its own, just like a Singapore private limited. So it will have to file a corporate tax return. So it pays tax right now, that's about 21%, which is your corporate tax level. A corporate tax right now, it could change, but right now it's 21%. That's at the federal level. Different states, different tax thresholds, but they tend to be single digits, low to mid single digits. But anyway, so the company pays taxes, and then when you, as the shareholder, receives a dividend from that company, in Singapore, that dividend tends to be tax-free, but in the US, that dividend will also be taxable in your hand. So that same money will be taxed twice. But in exchange for that, it is a stronger layer of legal protection, generally speaking. So the second option will be an LLC, which is a limited liability company that you did not elect to be treated as a C-Corp by the federal government, but instead you elected for it to be treated as a pass-through entity. So the equivalent, the closest equivalent to that in Singapore would be another pass-through, kind of like a limited liability partnership. So the point is that the entity doesn't pay any taxes. The income is taxable in the hands of the LLC, we call them members. So they're kind of like partners in a Singapore limited partnership. So the tax is paid by the members or the partners, not by the entity. So there's one layer of taxation, but there's an argument that the level of protection, legal protection, is not as robust as it is with a C-Corp. So those tend to be the two main entity options. There are a whole lot of others, and there are lots of different structures depending on what you're trying to do. But those are the two key building blocks that you'd want to have that conversation with your preferred advisor.
Please subscribe, like, share, and comment below. Our books and upcoming event are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.